For families living paycheck to paycheck, an unexpected financial emergency can be a backbreaker. But there is also a way to save both your situation and your bank account. Dan Cummins joining us now, explaining more in tonight's Stretching Your Dollar.
Jeff, whether it's a breakdown of your washer dryer, a child needs a new laptop for school, or your car needs new tires, a sudden need for money can be really stressful, but there are things you can do to salvage the situation without making it worse.
Look, we all know the pandemic has been a beast for our savings. As many as 70% of U.S. families already live paycheck to paycheck with less than $1,000 in savings. And according to Bankrate, 34% don't have any money saved. Obviously, that's cause for alarm. So what should you have?
You should have like 3 to 9 months minimum as far as income take home of your cash or liquid monies in the bank, credit union, whatever, for emergencies.
If you get in a situation where you need money to help cover a surprise bill, financial experts say there are options, including using those credit cards. However, Bankrate.com analyst Anna Staples says that should be last resort. It could end up hounding you months or even years later.
It's not an ideal solution, but sometimes people have to do that. And we have seen a lot of that going on, especially in 2020, when the pandemic hit and a lot of people realized, oh, I don't have any emergency savings.
Understanding your options can help ensure you make the best choice and meet your short-term needs without compromising your long-term finances. For example, you could ask your credit card lender to let you slide on payments or pay less until you get back on your feet.
So a lot of people, I think, are getting scared and they don't want to really talk to credit card issues because they feel like this is the enemy, they want my money. No, they're on your side.
It's important to evaluate the situation, then prioritize expenses. The most important bills are the ones related to food and shelter. Then you can start trying to find extra money, maybe a side gig. You can always swallow that pride and check with friends and family or talk with your bank.
Look at maybe taking a personal loan, talking to the bank directly, where interest rates are still low now. You can take advantage of that and then schedule, payments.
Financial advisor Alan Lance says once you're out of immediate financial trouble, you can start planning ahead so you're ready in the event of another financial emergency. You should start with an emergency fund with enough set aside to make ends meet for a few months.
Number one is emergency fund, and then two, if they match on a 401k, you really want to put in enough so they match, because that's 100% on your money if they're matching dollar for dollar.
Bottom line, having a plan in place will take a lot of weight, both financially and emotionally, off your shoulders.
Financial experts say if you feel like you're struggling, credit counseling is an option. There's all kinds of nonprofits that can help you for free. For Stretching Your Dollar, I'm Dan Cummins.